Good day, everyone, and welcome. Before we start, we have a disclosure. Please be aware of risk in the future trading. All our videos for educational purpose only. You're very welcome to follow any of our automated signal as long as you are on a sim. We're not responsible for your trade, and we're not your financial advisor. Good day, everyone, and welcome. There is a news coming out right now as we speak at 10 o'clock, and then we will analyze what's going on uh, after the news is coming in 1 minute. Thank you. Be careful, don't go long trade because we have a re-entry on 37.25 on a sim. We're not responsible for your trade. We're not your financial advisor. But if you're not in the market, we have an entry at 37.25. For the NASDAQ is 107.86, 107.86. And we have a re-entry on the ES, short, of course, 37.24. What happened with the NASDAQ, a profit taken on the institutional number right there. Here's your institutional. So what happened right now, the NASDAQ will go between target 1 and target 2. Those are an institutional numbers. Those are very important numbers. So as you see, if you've been following us for a long time, you will find the institutional number right there. And usually we have 3 targets, and the number 3 is for the afternoon, and you can see it's right on the spot. For the ES, it is here, it is your ES target. So this is something, plus minus couple bars. This is something where when the market hits target 2 at daytime, there is nothing left. Remember that. When the market hit the institutional number, profit taken, there is nothing left. Sometimes, very rare, the market can go to target 3 right there. So as an example, if you have a trade on an auto trade like the ES, close that trade, and do I need to reactivate it? No, you cannot reactivate auto trade, or you cannot continue trading or auto trading once the target 2 hit. If you are in a position that's very good, But once the target 1 and 2 hit, normally it is over for today, which we hit target 2 very early today. Normally they are around 11 o'clock, and today we hit it at 10:04. And there is no long trade, so do not allow any type of an auto trade to go long at this moment. The market is really still to the downside. So if you are auto trading, please hold your horse a little bit and deactivate your auto trade until we see what's going on after this data. We need to digest the 10 o'clock news, and we will wait a little bit. Look what happened on the ES, where we told you there is a re-entry. This is exactly where the ES re-entry, and we told you this is where the NASDAQ re-entry, and it came in right in line with is the re-entry. Both of the trade we called, they are a success trades. That's very good. Keep your eye on the target too. There is no long trade at this moment. One thing, most of the traders or amateur trading, there is a certain area on a chart you don't trade. It's not just a dishwasher machine. There is a certain area on your chart you do not trade, and this is one of them. Anything above the 37.25 all the way to the 37.39, this from here to here should not be traded. Why? Because there is a lot of resistance, there is a lot of technical. I don't want to go through all the technical here, but it is one messy area here. If we look, it's a very, very busy area in here, and it's not tradable. What we need to do, we need to wait till the market go off the high on this today. But because the market hit the target 2, usually there is not much left for the morning session. Remember that. Remember that. Then if we look at the buyers and the sellers is still a little bit over the buyers. This one here, the indicator, has a 6 different time frame. It's not just a small indicator. Have 6 different time frame in conjunction measuring the buyers and the sellers. This is not an easy piece of cake. So what we see here, the sellers still a little bit over the buyers, and that is indicating the market, it is struggling to penetrate the 37.29 at this moment. So from that area and above, you should not be trading. Every time when you are, it's the same thing apply for NASDAQ, gentlemen. If we look at this NASDAQ, there is, question is, how you want me to trade between those many lines? You cannot trade. Those lines indicating that there is no long trade, and you should not mess with a long trade on the NASDAQ. As simple as that. As an example, this auto trade now taking a long trade, it's not going to make it. It's not. Look, it's not going to make it. So your best offer is to close position on that one, because it's not going to make it. There is no long trade. Also, for our members, you can direct your auto trade to short only, like this. You can see the color change, or if you want to, you can direct the auto trade long only. If somebody says, I don't have time to do this, then don't trade. Don't trade. If you don't have time to manage your trade, don't trade. Because you can be lucky 1 time, 2 times, but if you don't manage your auto trade, you're gonna have a substantial losses. So if you don't have time to make money, don't make money, you know. But there is nothing called, um, we are totally black out of thinking, and we don't want to think. You don't want to think, don't trade. Uh, you know, that will not be good for you. Um, you need to manage your auto trade sometimes, and you need to get involved sometimes. It's required, not every single day, but it's required to build consistency. Like as an example right now, if this auto trade want to take a long trade, I will not allow the auto trade to take long trade. As an example, if I have an ES, right now I don't want it to take a long trade, I only want short trade. I can go ahead and activate short trade only because I see, and this is take 1 millisecond to direct my auto trade to take a short trades only. But also we don't need to be clever traders. Once we hit the target 2, as we see on NASDAQ and ES, that means there is volatility. 8 out of 10, there is nothing in the market of black and white. 8 out of 10, once this market hit target 2, and it is an institutional number, it's not an indicator come out of a kitchen somewhere. It's an institutional number. You have to respect it. It's not from an indicator from a flea market and is irrelevant to the market. No, it is an institutional number you have to respect. So once you hit the institutional number, 9 out of 10, the market go between target 2 and target 1 back and forth. And guess what? This is happening for the last 20 years. The reason it's still working because it's not available for the public. Those target 1 and 2 and 3 is on our server. It's not on the client hands. He can use it when he turn on his Ninja Trader in the morning. There is a communication between our server and his system, but it's not in his hands. So those updates, the daily, comes automatic to your Ninja Trader every morning. You don't have to do anything. The communication is between our server and your chart. It can update what's going on. So the institutional 1 and 2, once they hit, is finished for today, for the morning session. This is where the biggest mistakes, amateur trading, as we see now, the market want to climb above this number here, 37.26. It's not happening. It's not happening. Not at this moment. The market is gonna keep going back and forth between target 1 and target 2 for half an hour, 45 minutes. And this is where, gentlemen, this is where 90% of traders losing money on any type of an auto trade, any type, or a manual trade in this matter, they start losing money. You have to be cautious. You are swimming between sharks in here, and you have to understand when to jump into the ring and when you don't. If you do not have time, you don't have to sit down and get in a suntan from your monitors, but you need to keep your eye when you are auto trading, and when you see there is the market hit target 2, you need to pause yourself and maybe do whatever you're doing with your normal working day. As we see here, the Nasdaq hit 3,525. It was 5,000, and we just hit 3,200. Now, in this movement right now, I'm not going to touch this market, and I'm not going to jump on a trade. Yes, you can make a little money here and there sometimes, but I do not trust this market at this moment to go long by just going up 1 bar or 2 bars. Because of this fib lines, because of this heavy resistance on the NASDAQ, this area here is not acceptable and it's not tradable. I don't know if this market is going to be coming to the 37.38 and then going back again. So remember, on every breakout, don't take the first movement on the breakout. Wait, because the market is going to go back to reconfirm every number, and then the best way is to, on the pullback re-entry, start taking the trades. At this moment, this movement is not for me. It's not for me, whether you are a manual trader or an auto trader. This is a very dangerous area to open a position. As we see here on the NASDAQ as an example, there is an unlimited resistance here. There is a lot of resistance. I don't know which one is going to be rejected from, but if we are patient enough, and when we see, as an example, the ES as an example here, we cannot hit the very bottom and the very top every single moment. As we see here, there is a double resistance, and I'm not gonna go ahead and jump on the wagon because this bar moved a little bit. I'm not sure about it. So for me to build a consistency, on the morning we had a little short run, and it was very good for the auto trades, and we took a short run. That's very fine. At this moment, this market going is like when you're flying, going in turbulence, and I don't want to make a bet. And when there is turbulence in the market, you don't want to make a bet. As we see here, because if you've been long enough, what they do, they encourage you to start taking the trades, and when you start getting those trades, the market starts sinking again, and millions of traders get fooled by this. They lower you to go long, and then they snap it, those wells. So what we need to do, we need not to trust every single bar in the market, because it's a trap sometimes. As we see here, when the bar came out, that can activate any type of an auto trade, any kind of indicator, any kind of ATR, any kind of a MACDs and all this nonsense. And this movement here can activate any auto trade to go long. Is it really long? No, it's not. If we look here, the measurement, we can see the sellers is still one line above the buyers, and this is from 1 minute to 30 minutes, and from 1 to 30 minutes. The 1 and 3 and 5, they are on the positive, but the higher time frame still in red. Plus, we already hit the target 2 institutional number, and it is trap. You're not gonna miss anything out of this market. Even if you miss a trend, let it be. Don't jump. There is plenty trends. You should not be jumping on every single movement in the market and making a bet. To build a consistency is not optimizing auto trade. To build a consistency, knowing when you allow yourself to go in and you stay out. When the risk becomes very high, you should not be trading because you are gambling. The most important, not your PNL, is your consistency. Determine when to jump in and when to stay out of it. As we see here, the ES, I'm staying out of it at this moment. I'm staying out of it at this moment. Once everything is start lining up, once the space out, all those resistance, once they start space out, then I will start on the pullback re-entry, reactivating the auto trade to go long only. But right now, I don't trust this market to go long at this condition, at this moment. Because if we look a little bit ahead of us, we have a heavy double resistance at 37.39, and I'm not interested to take a trade from 37.30 as a manual trader, and I wanted to exit at 37.39. Then if we look at the market condition, the pressure, the momentum in the market is not indicating the market is very healthy. It does not indicate there is a lot of buyers in there. And then you have the lower time frame, the higher time frame is to the negative. This is not encouragement for me to go and jump in the wagon. So this is something, if we notice here is your resistance, and it's a heavy resistance, it's a double resistance. So the thing is, when we need to unleash any type of an auto trade, we want to know what is the risk. Let's say if you are having 10 ticks stop loss or 15 ticks of stop loss, really should I go ahead and take a chances 15, 20 ticks stop loss to exit at 37.39? Is it worth it? No, it's not worth it. Your losses are much higher than your winning, and it's not worth it. When we start unleashing the auto trade again, when I see this ES can maintain above 37.39, then it is now confirmed that this market going long. And this is the trap where, let me show you the NASDAQ. The NASDAQ also, it was a lot of resistance, and the NASDAQ is fighting this, to space out those fibs. That's very fine. But if we notice, the market is still struggling on this one here. Another things, you don't have to be professional trader. Another things also, when you get up in the morning, if we look at the ES, there is a three, on the market analyzer, there is 5 different type of automated trades on the market analyzer. But if we look at this market analyzer, there is a 3 signal for each instrument. If we look at the instruments here, it says buy and 2 down. This is, then if we look at the NASDAQ is to the sell order. If we look at the YM, it is the YM 1 buy as an ES and 2 down, indicating there is a weak long trade. Should I jump on it? No. It's not your game. I don't care if this trade is gonna make you $1,000, but your chances are to lose that trade is much higher than to win the trade. If you remember a couple minutes ago, we talked about double resistance, and here it is. There's a double resistance in there, and the market is not strong enough to penetrate this wall yet. It's trying to build the momentum, trying to build the pressure to break that wall, the resistance, but it's not strong enough. There is plenty of people out there that can sit down wasting a whole week trying to draw fib line. Fine. But the problem is, it's not about drawing fib line. The problem is indicating if this market going to hold on your fib line or not. Otherwise, then the fib line become irrelevant to your trading. Because we have a double resistance and we don't understand the pressure in the market, they are useless. But when we see the market is trying to gain momentum, but there is weakness, then there is most likely this market not able to break those double resistance. So it's not, we monitor the pressure in the market, the momentum, and we monitor where is those fib lines are, and then on this base we can indicate if we need to go ahead or not. So until this market penetrate those double resistance, this market is not for me. If somebody cute and telling me, well, I'm taking a trade and I'm making money on it, you're not the only one. We have Autotrade, and I can bring you down all kind of Autotrade making money on the long side. You're not the only one making money. I can bring you plenty charts is making money. Here, I have one is making $5,000 on that trade. This is not the point about the P&L. The point is how to build consistency, whether this ES make 4,000, 400, or 300, or 200. This is a very high risk trade. We should dismiss the P&L and we should look after consistency, not the P&L. Because if today the market did go up a little bit, does not mean tomorrow it will be reoccur the same position. It could be tomorrow, if you are in that condition, the market keep dropping and you keep losing. Our aim is not the P&L. The P&L become irrelevant. The P&L has nothing to do with trading, because you get lucky on one trade does not mean it is consistency. What we need to learn is how to avoid trouble by making $4,000 long, $4,700, $4,800 on that ES today does not mean it's going to reoccur tomorrow on the same conditions. So tomorrow you can, if you don't understand what is the danger in the market, it could be the opposite direction. You are $4,000 down. What it is the lighter we are, the less we expose our account to the market, the better we are. And we have to be efficient. So as a manual trader, do I need to take a trade in here? No, I cannot take a trade in here. When I can take a trade in here? When I see this market start gaining momentum, this is a breakout on a double resistance, that's very fine. Once I see this market penetrate this, pulling back, reconfirm, listen, reconfirm, become support, then it's tradable. The only method for the last 28 years I'm in the market, the only thing works in the market, confirming trend, confirm, not jumping on the first breakout. We have auto trades just for a breakout. We're not lack of tools, but as a manual trader, you need to confirm the trend, pull back, re-entry. From the last 28 years, this is the only thing still working. Many systems came in the last 28 years, and they were gone as fast as when they come in. The thing is, it's not about the P&L. The secret is not about the P&L. The secret is how to maintain not going negative on a daily basis. Today you can make $10,000, but tomorrow you might lose $10,000. our aim, consistency in the market. So if this market able to break this one here, and they decide they want to go up, once this market, if we notice this ES is come in and struggled on this double resistant, double resistant, double resistant, and struggled. Look at this. The buying power start gaining. The buying power start gaining. The market start getting lining up. If you notice here, the buyers start gaining on the sellers. And now if we look at this market, this from 1 minute to the 15 minutes, now they are all in the green. They all on the green, and the market is fixing to get full boost to the long side. So now the doors is about to open very soon, but I want to see this double resistance crossed. I wanted to see this double resistance no longer resistant. I want to see this double resistance become double support, and then you can unleash whatever you want, whether you want to unleash auto trade or you want to take a manual trade. So if we notice here, folks, the market is start getting momentum, and the market fell to penetrate those double resistance. And this is the story that a lot of amateur trading, they fell into this trap. They fell into this trap, and they think, okay, well, I'm going to miss a trend, and then I'm going to jump on the trend, so I will not. Well, don't be sure about it every time you're going to be missing a trend. Even if you miss a trend, it's going to be another trend, maybe tomorrow, maybe today, maybe in 10 minutes. You don't miss anything. So if we notice here, this ES auto trade was up to $6,000, and now it's down. I know what's going on. I know I should have taken the close that auto trade when it hit the double resistance. I know that. The difference is around $3,000 between the high and right now. I know that. So the consistency, to be consistent, we need to understand where the danger in the market. 1 minute, the market was showing to all the traders there is a long trade, and there is some traders with filters on their auto trade, irrelevant which auto trade, whether it's from us or a different company, is irrelevant. And then from here to here, most likely all the auto trades start taking long. All kind of auto trades. From here to here, all kind of auto trades start taking long. But it's a trap. Now for a guy have more experience, he knows the trap, and when the market start hitting here, he will go ahead and close position. That's fine. If he took a trade from here or here or here or here, whether it's 200, 100, 1,000, 4,000 is irrelevant. He knows it's a trap. Then he close. Or what he does, he go ahead and extend his profit taken, and he might put it under the double resistance here, under this double line. So, and now what we have, if we see, where is this market coming? Because right now the short trend is finished. What we have a re-entry long at 37.27. Again, if you decide to take that trade at 37.26, whether auto trading or a manual trading, your limitation to this trade is right there, the double resistance. It's irrelevant whether you take it from the 37.27 re-entry long, or if whether you take it from the 37.22, you're still on the same target. The target is right there. Where is the double resistance? It's irrelevant. It's irrelevant where you're going to take the trades from. The target is known. So as we see here, this market is coming to the re-entry point long at 37.27. But then you have to be very close on that trade, whether your auto trade is taking a trade or you are taking that trade. You have to be very careful, and you have to keep your hands on your mouth, because you need to exit immediately. You need to exit immediately. Now look at this. I forgot I have this auto trade directed to the short trade only, and I forgot to not to do this. And look at this, it's wrong. So what should I do right now? The condition in the market has changed, and what we need to say, long only. If we do that, I will be more relaxed to do this, and then I will keep my eye on the double resistance. It's very important. So as we see, look at this. It came in exactly right what we said. Look at this. And this is where now we start confirming the ground, where we are on the ground. Are we on the 30, which line we are going to lean on to go forward? Is it the 37.27? Yes. This is the ground. This is the support. This is where we can start from zero here, trading long. We monitor this double resistance. If this market penetrate those double resistance, come back, confirm. Now we are no longer leaning on that wall here on the ground. We are leaning on this double resistance. If this market break those double resistance and come back and drop to this number, that means those support lines has fell. It's always the chart is split in pieces. There is a certain area where it's tradable and a certain area is not tradable. As we see, this is the support area right there at 37.28. There is no short trade, there is no short entry, and this is the re-entry for the market to go long. If this market built momentum enough to break that, that means we are climbing till the rest of the day, till 37.83, till 12 o'clock. If this market is not your optimization and it's not your auto trade, if this market not able to break those double resistance, that means fast your seat belt, and we are going to bumpy ride all the way to 12 o'clock. There is no trend. Has nothing to do with your trading skill, has nothing to do with your auto trade. It's totally irrelevant to what type of an auto trade you are trading. It is the market condition is not going anywhere. And this is a very hard for an amateur trader to understand the difference. No matter how much you explain to him, he still don't want to listen, and he just wanted to just turn on the dishwasher machine, and his 10,000 has to bubble to 100,000. He doesn't want to comprehend trading. And as we see right now, there is buyers when the charts start blinking. There is buyers trying to move this market, but as we see here, this market is not able to break the resistance yet. You have a double resistance. The market is trying to build the momentum again, trying to build the pressure to break this one. Once we break this one here, we are going to the higher level at 37.76, straight out. If we look at this monitor, the market analyzer 5 minutes ago, the buy, it was one signal buy and two short signal on the ES. The Nasdaq was all in 3 sell, and the YM, it was like the ES. If we look at the ES, Nasdaq, and YM, they are very important to be in sequence. As we see right now, the market start getting strange. Before it was really mixed. It was one signal buy and two signals short. Now if we see the ES now is on full throttle long, and the Nasdaq is about time to go. It's getting the momentum, start getting strength to try to break that number here. And this is an early indication, understanding where is this market going. The market is struggling. The key is this double resistance. There is buyers, and now the market analyzer indicating the market start getting stronger. And the $1,000,000 question is, it's not an ATR or MACDs. The $1,000,000 question is, the trader, as a future trader, start indicating what's going on in the market ahead of time, before it happened. Your trade should be before it happened, and you should be full stop when there is danger. You don't jump in the rain with a gorilla. You don't do that. So this is what is the smart trader. It's not the smart trader making $4,000 on an ES Autotrader. It is. There is plenty of those. But the smart trader is understand when he can go on a full throttle and when he can go on a full stop. There is no such thing. Don't listen to those kids. There is some kids 24, 25 years old. They are trying to analyze Bitcoin. I've been trading for 28 years. What they have seen in the market, they have seen nothing. We have seen so much action in the last 28 years. And that's why they keep misleading on a Bitcoin, and that's why they keep failing. They fail to predict Bitcoin constantly, non-stop, from last year. They all have been wrong. They all said it's going to go to 100, didn't happen. Now they think it's the bottom at 40,000, did not happen. Went to 30,000, they say this is the bottom, did not happen. And now it's on 20,000, and they say it's the bottom. I'm not sure about that, because I was going to cover the Bitcoin. When I was trying to cover the Bitcoin, I didn't like the negative on the Bitcoin. I own a Bitcoin. I give it to my children. But when I saw the Bitcoin, when I tried to analyze it to share my view on a Bitcoin a couple days ago on Monday, I decided not to cover it because, as I said on Monday, you can go look at the recording on Monday. I don't like what I'm looking at. It's scary. It's not yet hit the bottom. Let's put it politely. I'm not against Bitcoin, and I will never go short on Bitcoin. Not in my life. I will never go short on a Bitcoin. But what I have seen on Bitcoin at this moment is not the bottom. So now look what we have here right now. If we look at the momentum, the pressure in the market momentum here, start getting a green again, and they want to try to penetrate those lines one more time, and the ES is trying to break this area here where it has fell on the previous try. So as we see here, the ES is still struggling to penetrate this. The question, the $1,000,000 question is, should I jump? No. Should I let the Autotrade take a trade? No. Let me show you. 2 trades on this Autotrade didn't make it. Let me turn off now, because I turned it on to long trade. I'm gonna leave it as is. Now can go take a long and short trade. Do you think this Autotrade is gonna make money now? No. I guarantee you that. This Autotrade, on the previous trade, he made $3,000–4,000 on that trade. On that now, if the Autotrade is taking a trade in here, he's not gonna make money. It's not your optimization as you told. The guy who told you is only optimization Autotrade. He cannot trade a paper bag. Don't listen to him. Protect your money. Look at your 1 minute. evaluate the market. We don't have to babysit the market. Evaluate it. Is it ready to go long, short, or maybe when it hit the bottom, maybe we need to stop auto trading. But there is nothing called you push the button, ignition, and now we are on the moon. There is no such thing called push button and is an ATM machine in any given trading, whether you are Forex, stocks, crypto, whatever. Look at this. This auto trade taking a long trade at this moment. What is the chances to survive that? If this market not able to penetrate that trade, you kiss those $600-700 goodbye. The market is trying. Now, if I'm auto trading and I see $600-700 on that trade, and I can look in here and see maybe it's not gonna make it. Look at this. From $700, $200, $300, and now it's gonna go down. What does that mean? Two traders are auto trading the same auto trade, taking the same trade. They don't have the same performance. They don't. If trader A keep looking at his chart, and trader B, he just turn on the dishwasher in the morning, it is like casino. You sit down on the table, you're gambling. Absolutely, at the end of the night, you will lose all your money. When you go to casino and you sit down on this table all day long or all night long, your chances going away from that table at night, 99.9% you lose all your money. If you look at those casinos, what they say they don't make money from people passing by. They make money the ones they sit. They give you drink. They make you feel good because they want you to stay. The longer you stay, the more chances you lose money. The same thing apply in the trading. You cannot turn on an auto trade, for God's sake, 24/7 and just yanking money out of the market. It's an illusion, will never happen. You have to be consistent and you have to understand when to get out, when to jump, and when you find a good number, you stay out of trouble. Now again, this auto trade made $1,000. I'm not going to argue with that. Is this consistency? No. Would I take? You have to ask yourself a question. I'm hitting a resistance here. Would I take a long trade manually in here? No, I will not. If I'm not allowing myself to take a manual trade in here, because I don't know if this resistance this time is going to hold or is going to break out. If this market going to break out, then I will unleash the auto trade to take a long trade, because there is, if this market break out, we have a long way to go, all the way to those numbers 37.90. We have a long way. There is a plenty ticks to be made. If this market fell, it's still struggling on the same number here, and it's still struggling on the same resistance, I'm not sure. I'm not sure about that. So if we notice here, one of the things is when you are in those conditions, and if you see what you do, you can get involved with the auto trade and you say, okay, I will secure some of this money, and by adding manual orders in there, the minute you do this, the auto trade will deactivate, and then you do all of it manually. You can secure some of it. If this market break out, you make more money. If the market go back, then you have some of the profit, and then you do not continue trading, you walk away. Whether you come in at 8 o'clock, 9 o'clock, 10 o'clock, it's not, you're not supposed to be taking every single trade. Once you see this window open, you unleash your auto trade or your manual trade. If you can make $50, $100, $200, $300, and you say, okay, this is enough for me, I'm going to stop. This is the smart trader. I have okay, this is very good. Lewis made 5,962 on the ES. Okay, well, he's using, Lewis, you're using Ranko bar. I think I have one, is Ranko bar, but my Ranko bar is not for me. I just do to show traders if you can trade Ranko bar. My Ranko bar was finished in half an hour and made 2,100. Yours made 5,962. Very good. For our traders, Lewis is using the reversal auto trade, I believe, called Symmetry, in conjunction with the trend exhaustion. This is very good, Lewis. If we see here, gentlemen, 1 minute you had, that's why I said two traders are taking the same trades does not mean they make the same money. If we notice here, we are on 1,000 average, 1,300, 400 right there. If we notice here, if we look at the ES for the last 5 minutes, still on the same line. Is it going to break it? Maybe it's going to break it. Maybe it's going to go down. For a trader, if you have $100, $200 on this chart, $300 on this chart, $30 on this chart, and you say, you know what? I don't see this market is going anywhere, close position. As we see here, 1 minute on this trade, it was 1,400, and now you just smoked half of this money. And now if you don't take action, you're gonna also smoke the rest of the 900 or 800. If this market going up, then you're gonna double up this money. If this market going down, you're gonna walk away with a banana with nothing in it. So every single trade is a unique trade, and you need to keep your eye on it. But what we need is balance, consistency, and once we hit one trend, once we hit one spike, we need to stop. We need to stop. You cannot sit on a gambling table all day long. That's why those guys, they turn on the auto trade all day long. They never get anywhere. They don't. Your auto trade, let's say if your daily target 1,000 and you're taking one contract, your auto trade can go to $300, $400, $500 profit when the market is moving. When the market is sideways, then you have a profit 500. You're gonna go down to 200, 100. maybe minus. So your auto trade is working all the time to climb to your target 1,000. The harder the auto trade is working, the longer time the auto trade is working, the odd they start going against you, like you are in a casino. The difference is between one guy is taking daily target 300, B trader is taking 500, C trader is taking 1,000 on the same auto trade. The guy is taking $300 a day. He's finished faster than the guy on 500. The guy on the 500, maybe the auto trade made 300 and now going down to 100 and then 400. Maybe the market is sideways and then he's gonna hit the 500. The guy with it 1,000, most likely on one contract, he's gonna be going expose himself to the market non-stop all day. The odd for this guy making 1,000 is less than the guy is wanting to make 300. The smartest way is to do it. If you start with one contract, you start learning the market, and let's say your daily target is 300. Once we start getting comfortable, we add one more contract, and now our daily target 600. Once we get more comfortable, then we can add one contract and we say 3 contracts, 1,000. What we do, we still maintaining the time, exposing ourselves to the market, but we are adding more contract so we can finish faster. But if you wanted to, let's say, extend your target, you should, and you think by extending your timing in the market, the odds are against you, because the market can trend for 10 minutes, 5 minutes, 30 minutes, 1 hour. Then it's gonna go sideways. Remember, the market spikes once a day. If you miss the spike, the rest is rubbish. The market does not spike non-stop and is going up and up or going down and down non-stop. It's not going to happen. As we see right now, this market was barely able to break this double resistance. Okay, so now we are in the free zone where now we start getting comfortable with our trade, and this is where we can start unleashing some trades once we pass those double resistance, and now the market is going to start climbing smoothly to the next level at 37.70, and nothing is holding this market, nothing. So we know that the market is going to climb because he broke this double resistance line. So it's much safer to start re-aim your auto trade to the long trade, and we know our destination is going to be, the first one is 37.70, and then somewhere around 37.82, and then it is 38.06 institutional numbers for a long trade, and that is depends on the timing. Right now is 11 o'clock. Usually the institutional number, it should happen around 11 o'clock, and there is a long way from home. We will wait 5 minutes, 10 minutes to see if they are able to climb it. But now this market start getting stable above those turbulence, double resistance, and now we have the indication is a re-entry point 37.38. So now we are climbing in the right direction, and we start getting safe into this direction. So it is really important to This trade here on the 11 range took that trade, made 2,000. That was a very hard money to make. From here and above is much easier money. This one here is a high risk. This one here is much easier climbing. All the way to the 37.68. Once it gets between those two yellow lines, that means it's finished, the trade. But now it is much easier money, less risk above that line to here. Doing the climb breaking those two resistance, it was a high risk trade. Simple. High risk trade. So the PNL on this 1,700 or 1,800 is a high risk trade, and we still, if you notice here what happened in the market, want to reconfirm those levels. So you never miss out, and then once those numbers are confirmed, you can take a trade long with your eyes closed, and more relaxed and more consistency in your trade. So if we notice, if this market want to pull back, now this is the number you need to lean on. It has been confirmed. It's the 37.39. This is the number we can lean on as a re-entry long, right there. And now the market able, if you notice here, you can see how hard it is to break those levels. It is an important level. And now if there is any pullback, will be at 37.38, and the market is going to be on a cruise control all the way to the 37.70 at this moment. So this is where we know where we are in the market. In the same time, if we look at the market analyzer, it is 3 signal buy, 3 signal buy on the Nasdaq, and YM 3 signal. That means this market is in sequence. And once this market is on sequence, all green, this is no matter what you do, whether you are a manual trader or an auto trader, you are on a full throttle, and it is, you're out of this turbulence, and now you are flying above those numbers. Now you can sit down and relax. So above that number here, there is no turbulence. Below that number here, 37.39, you are just looking for trouble in the market. If the market pull back, I can add a contract on 37.39, but the market right now here is above the turbulence, and now we are on a smooth ride. The key is not the PNL, the key is to have a smooth ride in the trading. You don't need to go into between the junk, between support, resistance, mini support, mini resistance, projection, and all this nonsense. You don't need to do that. So, folks, it's 11 o'clock. We are extremely busy. I want to say thank you very much for today, and God bless you all. And we'll see you tomorrow, the same channel, the same time, 10 o'clock. Bye for now.